This is Taking Stock on Bloomberg. I'm Pim Fox. So is there a credit crunch when it comes to small and mid-sized businesses? If big banks have turned off the taps, how will entrepreneurs get funding? Let's find out. Dale Kluga, he's the head of Cobra Capital. He's taking the pulse of business in Middle America. Let's find out more. Dale Kluga, welcome to the program.
Thanks, Pim.
All right, so you were listening a little bit to what Wilbur Ross was saying in that exclusive Bloomberg interview. Is it really difficult for small and medium-sized companies to access the credit markets?
There is a huge big bank crunch on small and mid-sized companies that are critical to our economy and represent over 60% of our GDP. And without them, we have no jobs.
All right,
so I think it's really important.
All right, so if we've got a credit crunch right now, I mean, is it that we're not getting that information from the big banks? I mean, are they just holding on to the money, or have the requirements just become so stringent that no one can really access it?
I really think it's both. I think the big banks are hoarding their cash because many of them are operationally and technically insolvent. And the government is afraid to disclose a lot of this for fear of bank runs and so forth. So I think that's a real issue.
So what's the alternative? I mean, is there a way for small and mid-sized companies to actually get financing?
Absolutely. There's plenty of active lenders out there, both banks and non-bank lenders, perhaps smaller. I would not include the big banks in that list, but there's plenty of money out there to be found. You just have to find it. The real issue is the flow of capital is being locked up. The CITs of the world are gone. The securitization market is in lockdown. The real issue is how do these active lenders, both banks and non-bank lenders, how do they access the money that they need to fund this growth and to get us out of this hole of an economy?
All right, well, give us some examples. I know that you've worked on some financings in the past. What kinds of companies are we talking about in terms of being cash-strapped right now that you've financed in the past?
Well, I can give you two good examples. One, a larger company right now whose sales are very large, closing in on $1 billion, and another one that's a small business with $10 million in sales. Redbox, the DVD vending machine company, it was a startup 5 years ago that Cobra Capital, our firm, supported as a startup, and with the exception of Cole Taylor Bank, Cobra's bank, we found no other banks in the city of Chicago that was willing to help us finance that growth. Today, if not for Cole Taylor and Cobra, Redbox, I don't think would be where they're at today. And we've financed over $60 million of equipment for them. They're highly successful. It is a solid business model. It is a prudent credit risk, but yet I could only convince one bank in the entire Chicagoland area to take that risk. So it's paying off now, but that's an example of a larger company. Example of a smaller company is Hollywood Boulevard Theaters. It's a unique concept. It's a dinner theater concept. It is the first successful business model in the dinner theater role that I believe is out there right now. That's another successful business approaching about $10 million in revenue. We're financing their Naperville theater operation, and that's another business that deserves funding. The cash flows are there. These are good, prudent credit risks. These are not subprime credit decisions whatsoever. There's examples of banks too, Pim. There's banks in the Chicagoland area, in addition to Cole Taylor Bank, a $4 billion bank that serves customers with sales of $5 to $200 million. They themselves have grown their loan portfolio significantly, up to $1.4 billion at the 6 months ended. That's a tremendous growth record. Another great bank here in Chicago, another terrific management team, is the Private Bank. The Private Bank is an $11 billion bank, also well-managed team of executives. They have also grown their loan portfolio from $8 to $8.7 billion. So both of these banks have done just a tremendous job in serving small and mid-sized companies. Why the heck can't the big banks do this?
Well, so what are you finding is the answer? I mean, is it because you just can't get the audience with them, or because, what, they only want to deal with publicly traded companies that are already successful and really don't need the funding?
It's all of the above. If you start with the big banks, the largest banks in our country, I think many of them are operationally insolvent. And to a certain extent, if they mark to market their assets, they'd be technically insolvent too. So I think they are hoarding cash because of this natural fear that they perpetuate that stalls our economy. Even the banks, the large banks with the TARP money, are not serving the small and medium-sized businesses like they should. They have shut down those markets, and they're only handing out money to those large corporates, the publicly traded firms that don't need the cash. They have their own cash. So they're not helping the small and middle-sized businesses.
All right. right, we're going to continue the conversation. We've got more with Dale Kluga of Cobra Capital. We're going to find out what's the government's role in all this. Isn't the government supposed to be funding small and medium-sized businesses? We'll give you the lowdown. This is Taking Stock on Bloomberg. I'm Pim Fox. Okay, so if there's a credit crunch, what happens next? What about unfreezing the credit markets? Well, let's turn to Dale Kluga of Cobra Capital. He maybe has some ideas. Dale, so what should be done? I mean, you're talking about unfreezing the markets. What has to happen?
Well, I think there's a number of things that has to be done, and it will take time. But I think the first thing we need to start with is we need to stop these silly bailouts. The moral hazard has already proven this to be a terrible mistake. So stopping the bailouts, I think, is the first step. The second step is, I think, we really need to get rid of the weak banks. The banks that are hoarding cash, that are not contributing to our economy, don't belong as banks. They should surrender their charters. They should be broken up and sold. The third thing I think we really need to do, Pim, and it's a hot topic today, is I really think the Fed and the Treasury needs to be a little bit more reasonable about the standards they're requiring from private equity firms. They need to allow them to run the business. They need to perhaps lower the capital requirement a little bit. But in exchange, I think what we need to expect from the private equity firms is that those principals have real skin in the game and that they are at loss if that bank loses. And they also should be required to only hire experienced management teams that know how to run a financial institution properly and prudently. So I think that's a big thing. The other thing, Pim, is FASB needs to get real. Mark-to-market is an illusory concept. It doesn't work. They can theorize as long as they want about this, but they need to consider what the IASB has done. And I think a more hybrid amortized cost approach to marking assets is a much more reasonable approach for those assets that are held to term. I think that's something that they should reconsider. I think it's absolutely silly to mark-to-market deposits. It makes no sense whatsoever. It's unrealistic, and it's not necessary. So I think that's something that FASB has to do. Those are the things that I think we principally need to look at. But the biggest, and I think the most important issue right now is before the government starts disposing of these weak banks, they need to have a plan B. I don't hear a plan B coming out of Bernanke. Our plan B should be...
for what?
A plan B before they wind down banks, which are necessary to get our banking system back to health again. And the plan B, I think, should be some type of temporary facility that allows the active lenders and non-bank lenders to have access to borrowing facilities so that we can fund the growth of small and mid-sized businesses, so that we can provide the jobs that we need so we can recover in this terrible economy we have.
So do you think that non-bank lenders, they should be allowed to get more into the banking business? I mean, is that a government regulation that could be changed overnight?
Pim, I doubt you're going to find many non-bank lenders that want to be in a regulated banking business.
Right.
So, I don't know about that. But what I can tell you is that the non-banks serve a crucial role, and we can help.
All right. I want to thank you very much, Dale Kluga, coming to us from Cobra Capital, talking about bank and bank lending.